This time last year, the Bank of Japan decided to keep its benchmark interest rate at a range of 0 to 0.1% and kept its $375 billion credit program unchanged. Well, a lot has changed since then, including a number of recent rate cuts by key financial institutions such as the ECB and a surprise one by the People's Bank of China. Now the Bank of Korea has decided to cut its repo rate by 25 BP to 3%, sparking further concerns that global growth is taking a lot longer to recover than originally expected. Well, on the line to tell us more about the Bank of Japan's rate decision is the Associate Director at Citi Credit Capital, Donna Yang. Donna, thanks for joining me. I know you currently specialise in Asian markets. We know the BOJ is determined to depress the yen. Last night it announced no change to monetary stimulus and instead opted to increase its asset purchasing programme by 5 trillion yen, which is about $63 billion. Yet there's concern that the country still hasn't properly recovered from last year's tsunami. Do you think Japan will go into recession, and how will the BOJ deal with this if it does?
Well, clearly last year's tsunami was an enormous tragedy for the country and also had a big impact on Japan's economy. But again, we have to understand that Japan has serious long-term economic challenges. Japan is very vulnerable because it always relies on a healthy global economy. And of course, that's not happening at the moment. Also, Japan is very vulnerable to movement in the oil price because they are a big energy importer. Will Japan go into recession? Maybe not. I will be surprised if it does, because not just Japanese government, but also the OECD are forecasting around 2% growth this year and around 1.5% next year. The key factor driving this growth has been $250 billion reconstruction program, which boosted domestic consumption. But obviously, this is just one-off measure. Let's see if it does go into recession. If it does, Bank of Japan cannot do that much with their monetary policy because their interest rate has been around zero for many years. So they cannot use that to boost economy. Or maybe they raised government spending, but that's not a good option either because the big question mark will be where they're going to find the money. And probably through taxation, but that will possibly to drive up the borrowing figure as well. And the market do not like that either. So obviously they don't have that many options. So I think maybe the best option is just to stick with the growth policy and hoping the recession doesn't come.
Some analysts are saying there's been a lot of pressure recently for many Asian countries to follow China's lead by cutting rates, which of course they did last week. Now the Bank of Korea has jumped in as well. Do you think more unity is needed between Asian countries and the rest of the world to tackle the global financial crisis? And where do you think Japan fits into all this?
Well, as we all know that we are facing many global challenges, and the best policy would be follow global solution. But obviously, this is not a perfect world, and it is not easy to achieve this. Probably it makes sense for Asian economies to work together and develop a common approach because most of them have quite similar economic model as emerging nations. But this is not so easy in practice. Of course, China has cut its benchmark lending rate and a deposit rate because it is feeling slowdown pressure and it needs to give economy sort of a boost. Other Asian markets could follow this approach over the coming months, but it's really down to them and we have to wait and see. And you mentioned Japan here. Well, for Japan, to me, Japan is a completely different story. As we all know, since 1990s, Japan has faced complicated economic conditions, which we all know as lost decades, which is very different from the rest of Asia, and this formed the background to their policy on rate and their own currency. It is worth remembering that Japan was the first country to use quantitative easing way back before the current crisis. So, to me, Japan is a very special case.
OK, let's look at the yen for a moment. What's your overall view of how it will fare in the coming months?
Well, currently, in general, to me, dollar yen is trading sideways. However, yesterday, Wednesday, Japanese government said it will take decisive decision in foreign exchange market if strong gain in yen will strengthen the country's fragile economy. And I will expect yen will probably keep the same trend in the coming months. But a lot depends on what's going to happen in the Eurozone in the coming months ahead. let's say if Euro countries start to get their act together, investor may come back to Euro, and that will have sort of a positive effect on the yen. If Euro crisis getting worse in the coming months, investor probably will still see yen as a safe haven.
And finally, will this decision by the BOJ really help overall growth in Japan?
Well, to this decision of expanding asset purchase program to 45 trillion yen instead of stimulus, to me it went slightly against market expectation. So the immediate market reaction was Nikkei was down 1.5% today, and yen resumed gain right after the meeting. And in general, it is difficult to see how Japan will unlock further growth given the whole unpredictable global condition. But in the medium term, I think much depends on what happens with the Euro crisis and whether there is pickup in the US and China, which is both very important markets to Japan. But I will bring all of these back to the long-term picture of Japanese economy that has a big problem to sort out in the years ahead. So to me, longer-term view for yen is not that positive.
Well, thanks for joining us, Donna. Some interesting points there on both Japan and the BOJ. I'll be back with the economic calendar a bit later, and then tomorrow we'll have a look at the week ahead. But for now, goodbye.